Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Thursday, April the 8th, 2010. For the past couple of days, we've been doing videos on the 3-year weekly charts of the major markets. We covered the Dow Jones Industrial Average on Tuesday, the NASDAQ on Wednesday, and today we'll do the S&P 500. One side note I'd like to mention, we had initial claims data out for this week. Came in less than basically was not in line with analysts' expectations, and this again shows the same trend we've been noting for the past couple of weeks where analysts are off the numbers. They're overly optimistic. That's important because the market adjusts lower whenever that news comes out because they're pricing it too high based on something that's not really there. I think you're going to continue to see that starting April the 12th. We have first quarter earnings start rolling out with Alcoa. I'm looking for you'll have some companies that'll do better and worse, but overall I think your trend is going to stay the same where analysts are overly optimistic, and that's going to actually keep giving you more reasons to be bearish, not bullish. Let's say I just saw a headline a moment ago. I haven't gotten into all the numbers of it yet, but 33 states are out of money for their unemployment benefits have been paying out for forever and a day, and this is not improving. So again, I have no fundamental or technical reason to be a bull here, and I will continue to show that on this chart. Now, let's look at the RSI indicator. It's extreme overbought, extreme oversold condition. At this line right here, I'll draw a little line right there. Right there is the 70 line. At that point or higher is extremely overbought. This is the 30 line of the RSI indicator. At that line or lower is extremely oversold. Okay? When you see those conditions, you need to be looking for a shift in a major trend. Okay? So let's go over it right quick. Right here, back in 2008, we crossed over the 70 line, hit 70 and higher. That was your peak. Price didn't peak until some months later. Okay, our peak here was, let's see, roughly April, May, somewhere in there is when the RSI indicator really got hit the overbought line. All right. At that time, the markets did pull back, but continued higher and made new highs back all the way until October when the actual peak happened. And so you see that even though you've peaked here, you can still have months of the market fighting the reality that a major trend shift has happened here. Okay, and that's what you need to be looking for. The selection of the choices you make are important during this time. As some stocks will continue to move higher, but the overall trend in the market has shifted to a bear platform, basically putting the favor of the trade in favor of bears. We saw it in March 09, a nice big bounce from the markets over here. Okay, before that happened, we had the oversold condition, extremely oversold below 30. When that condition happened, you need to start looking for the shift in favor of bulls. Okay, we went over this in the NASDAQ yesterday with really good analysis there. So if you haven't watched that video, go ahead and watch that. For now, I just want to show the difference between the time that it triggers and then the time that the market actually responds to it. There's a lag there between the indicator of the RSI and the actual price activity. Right, so be expecting that, but the overall truth is still the bottom line is get the information that a trend shift is in play. Okay, and now we are here today at 68.85, just shy of 70. So be watching that. It's not quite touched it yet on this chart. It is over it on the NASDAQ, and the Dow Jones is at it. So they're more apt to. They're showing that they're more overbought than the S&P 500 at this time. But again, there's a time delay between price activity and this extreme overbought. So I would be now looking for my shorts, which, for example, looking at the NASDAQ chart, which shows you that different times over this year it has hit the 70 line. We didn't actually start going short until the third time it did it, and so my first short play was on March 1st, and from that point forward, I'm looking for shorts. Okay, regardless, the market can continue to move higher. The news keeps coming out saying we're overpricing this whole rally. Looking at this 3-year chart, you'll notice we recovered almost all of the losses, all but 30% from our previous high. With consumers being hit as hard as they've been hit on all fronts. You look at unemployment, a great deal of unemployed consumers out there. You look at the fact that taxes are going up, that's going to hurt consumers. There's less money in their pocket. You look at the fact that housing is down. They can't tap their homes like they used to. That's less available to them to spend, and that hurts consumerism. You look at credit available to everybody. It's been the standards have been raised basically, and that gives the people less money to spend as well. And with our economy being driven 70% by consumerism, it's really, mathematically speaking, if you just want to be really simple about it, you would simply say this is what people thought the economy could do before. We knew it wasn't true, but we thought it was at this price. You just say your consumers are dead. That's 70% of your economy is toast. So you should not be 30% away from your previous high. You should be 70% away from your previous high. That's one way of simplistically trying to explain to you the difference in fundamentals and how it should reflect on the price of the chart. But again, price and fundamentals do not run perfectly in tandem. They can, veer off here and there, but at the end of the day, fundamentals are going to own, the market, and technical analysis as well, but not immediate. Okay, so you got to remember there's a disconnect, a delay, if you will. Okay. So again, this is our last chart on the long-term 3-year until we come back and look at it later. Perhaps if it continued to move higher, I might look at it again in a few weeks or a month or so. But for now, I just want to point out, very clear on the technicals, very clear on the fundamentals. We are overbought this market. It's a sucker's rally, in my opinion. I'm not the only one saying that now. Definitely be either listen to the guys that know what they're doing, or go flip a coin. Right now, the technicals are telling you do not be long this market. It's not true. The activity you're seeing to the upside here is going to be short-lived. If you're not a full access member, listen up. We have a change in play for you. Shut up. We have a change coming up. We're only going to sell 10 more memberships at the 145 rate. That's our sale rate. We're only selling 10 more of those, and then she will be done. In other words, we will raise our rate after those next 10 are sold. And if you don't want to pay the higher fees, go ahead and sign up. You're one of the last 10 people that we allow access for the 145 for the year. Regardless of what you do, refer your friends. God bless and enjoy your evening.